Hello, hello, hello. All right, this is going to be July 5th, 2024. Um, and it's going to be a trade recap video over what happened today. Today was NFP, and let me show you just what occurred in the charts. Okay, so should I turn on your webcam? Okay, so coming into today, NFP Friday, we had a basically a break on Thursday during July 4th. So no trading occurred during that Thursday. And my thought process coming into the NFP Friday was, I looked at I'm on the daily time frame. I'm on the higher time frames here. So I'm anticipating for us to leave this daily break, this daily FEG here. I was gonna treat this as a breakaway gap coming into Friday, and I wanted to see Friday take out previous day high, and which we did. We ended up taking previous day high during the London session again today. So after previous day high gets taken, like I said before, that's our higher time frame objective. We don't have any other highs to target because that is our those were all-time highs again. So we're continuing to make all-time highs on NQ. One thing I did want to note was that at NFP, during NFP, we had this SMT here with the ES, and we never looked back at data lows. So NFP, we took out sell side here first. We took out London and Asia's highs, London and Asia's lows, and then we took out London highs afterwards, and then we never came back to the data lows, this SMT low here. So coming into that morning, like I said, we took out previous day high already, and so I only wanted to trade like lower time frame objectives, like lower time frame models. So the first thing I noted coming into 10 o'clock was this 4-hour high right here. I noticed how we closed on this 4-hour candle, and just looking based on this 4-hour candle, what can we anticipate for us to take this 4-hour high? So this 4-hour high became my objective, and we instantly took that at 10 o'clock. So after taking that 10 o'clock high, I didn't really have any, I didn't really have any, objectives. So I just waited till time, and I waited for time to, pass by, and to allow prices to show me if we have any like other moves or not. So the trade that I did end up taking today was based off of, it was based on what happened after lunch session, and coming into the New York PM session after 2. Okay, so let me go to when I took my trade here. Okay, so notice how we just continued to expand higher after taking previous day high and data high. We continued to reprice higher. We don't really create any FEGs here on the 15-minute time frame during the morning, besides this 9:45 one here. We retraced into it, and we just continued higher until we had this 15-minute FEG. We retraced into it during the lunch session, and we respected it. So I'm looking now. So we respected this 15-minute fair value gap. We also are now coming back inside another 15 fair value gap, and notice how this 1-hour candle closes here, or 4-hour, 1-hour, and 30-minute and 15-minute. So based on this 4-hour and 1-hour price action here, I am anticipating for us to target this hourly high, this 4-hour high, when we retrace back inside this FEG. I don't initially, my trade wasn't initially at this 15-minute fair value gap, because I don't like how the risk is. So the risk is a little bit too, 24 a point stop loss to target the 4-hour high is a little bit too is too much for me. So I wanted to mitigate it. So the way I mitigated my risk was that I wanted to trade the lower time frame models because I understand that price is fractal. So one key thing I do want to note here is that we also traded back inside a 1 hour FEG, and on the lower time frames it appears that we took out, you know, sell side, but on the 1 hour time frame we retraced back inside this 1 hour FEG and we had this type of candle. So looking at this hourly candle close, are we anticipating to retrace back inside this hourly FEG or this hourly high right here? Just based off of that, this power of 3 right here, I'm anticipating the next hourly candle to be a open, low, high, and a close. So like I said, I don't initially take the entry right based off of this 15-minute fair value gap targeting that 4 hour 1 hour high. I wanted to see a reaction away from that 15-minute fair value gap. So I go onto the lower time frames and I notice, okay, so we had SMTs here with the ES at this low. We displaced away from that 15-minute fair value gap and we created another 15-minute fair value gap. So my trade was based off of this 15-minute power of 3 right here. So this 15-minute candle. So notice how this 15-minute candle closed after tapping a 15-minute fair value gap. So this candle, you can anticipate for this candle's high to be taken just based off its power of 3. So the next 15-minute candle, I'm anticipating for us to go do something like open, low, high, take out that 4 hour high, and then close. I don't really care where the close is. I just want to take. I just want to be able to trade with the objective, and my objective for this trade was to take out that 15-minute high, and terminus was going to be at the 4 hour high. So noticing how this 15-minute candle closed, I go onto the lower time frames to see if there's any entry pattern that I can take. So on the 5-minute time frame, I don't see a fair value gap. I go onto the 4-minute time frame. I see a 4-minute fair value gap. And I also see a 3-minute fair value gap. So now looking on the 3-minute fair value gap, that's going to be my entry pattern, right? So I go onto the 1-minute time frame, and then I mark out, 2 p.m. open. I'm gonna state this again. ICT always talks about the midnight opening price, and you always want to be buying below the midnight opening price, right? Here you can apply the same concept of buying below the 2 p.m. open, because that 2 o'clock open is an important time. It is the time. It is the opening price of the new 4-hour candle, and a new hourly candle, a new 15, a new 30-minute candle. So you want to buy below this open right here, right? So price is open. So let me mark out that 15-minute high that I'm targeting. 15-minute high. So that is my objective for this trade. So when prices retraces back inside this 3-minute FEG here, I take my entry. I had my stop loss at this 1-minute fair value gap low, which is the 3-minute low as well. So notice how if I were to take my trade purely based off of this 15-minute fair value gap, targeting that 4-hour high, notice where my stop loss has to be. It has to be a 23-point stop loss, because I'm entering based off of the 15-minute fair value gap. But look, whenever I trade the same model, exact same model, I'm trading on the 1-minute time frame. Look, notice the risk difference. I go from 23-point stop loss to an 8.5 point stop loss. That is significant. This is why I like trading the lower time frame models. It's just, it allows for lower risk, and it just it's more accurate, if that makes sense. It's and now I want to say accurate because all time frames are accurate, but it allows me to be more nimble. It's more nimble. It allows me as a trader to be nimble because I'm a day trader. And ICT says this over and over. Its prices are fractal. So the same model that's playing out on the 15-minute time frame is now playing out on the 1-minute time frame. So I entered, like I said, at that 3-minute FEG, and we ended up getting stopped out. This trade right here, I would take this trade 10 out of 10. This for me right here is an A plus setup. The thing I do want to talk to, like, you know, for as day traders, we're basically risk managers. We have to understand when to take a trade and when not, and whenever we follow our rules allow us to be successful day traders, right? This trade that I entered right here, there was nothing wrong with it. It just didn't play out. Maybe my analysis was wrong or something like that, but this literally right here is an A plus setup according to how I trade. I'm buying below the 2 p.m. open. I'm targeting a 15-minute high, which is my objective. My partial is there, and then my full terminus is the 4-hour high. I have a lower time frame supporting PD array, and I'm also trading with the higher time frame narrative. We went higher. We displaced away from a 15-minute fair value gap. So like I said, this trade I would take this trade 10 out of 10 times. Every single time I'll take this trade. Because I know my model works out. It's just like I said before, as day traders, you want to ask yourself, are you willing to take this trade? Do you have that conviction? In this trade, I had my conviction. I was very confident that we would take this high, but since we didn't take this high and I got stopped out, it's completely fine. I'm okay with taking that loss. And I think that is all for my trade today. I have a video, a trade execution video of this trade. I'll post it probably after I post this video. But I do want to talk about this trade I saw during this is London session. So you guys get a little bit extra today. Alright. So this trade right here, I do believe it is based off of the 30-minute time frame. Yeah, 30-minute power of 3. Okay. So we took out previous day high during London session. Like I stated before, we take out previous day high. So now, I'm only trading lower time frame models. I don't really have a higher time frame objective for prices to take after we take out previous day high. So I noticed how on the 30-minute time frame we created this 30-minute imbalance, and I wanted to see if prices will respect it or not. So after backtesting and looking at what happened during London session, I noticed this trade is I know I would have taken this trade again. Like, this is the same model. It occurs every single day, every single week, and every single month. So we come into a 30-minute FEG, right? And notice how this 30-minute candle closes. This 30-minute candle closes, bullishly. I'm not going to take this trade based off of the closure just because of the power of 3. But just looking at it, I can anticipate for us to take out this high, right? And the algorithmic signature of this trade, look at how we respect that consequent encroachment. Prices are closing above the consequent encroachment, but the wicks are, we are wicking outside of the we're wicking even past the fair value gap itself. But the wicks do the damage, the bodies tell the narrative. So we respected a 30-minute FEG's consequent encroachment on the 30-minute time frame. Notice how if I mark this 30-minute FEG out on the 15-minute time frame here, notice how we close below this consequent encroachment on the 15-minute time frame. But this is a 30-minute fair value gap. This isn't a 15-minute fair value gap. It's a 30. So the first aspect of my understanding of time frame alignment, I never understood ICT's way of teaching it because it wasn't clear, but this is my understanding. So the first aspect of the time frame alignment concept I have is that a candle like a 30-minute fair value gap should be respected on the 30-minute time frame. on the 1 minute time frame, you know, we might get closures. We might get closures below that 30-minute FEG, but the closure has to occur on the time frame that it's created. So if a 30-minute fair value gap gets, you know, closed below on the 30-minute time frame, then that's a respectable, you know, that's disrespect to that PD array. But since it wasn't, like, since I said before, since this is a 30-minute fair value gap, I want to see us disrespect it on the 30-minute time frame, not on the 15-minute, not on the 5-minute, not on the 2, 1, 4, 5-minute time frame. I want to see us disrespect it on the 30-minute time frame, and we never disrespected it. We respected it. We respected the consequent encroachment, and that to me gave me, you know, it gave me conviction. It gave me confidence to want to see higher prices. So based on this power of 3, this 30-minute power of 3, I would now go onto the lower time frames to find any supporting PD arrays that supports the idea of us taking that 30-minute high. So this is the 30-minute high right here that I'm talking about, and let's try to find that on the chart. So this is that 30-minute high. So I'll mark that as 30M high. So I go on to the 5-minute time frame, right? That's the time frame below the 30-minute time frame. So on the 5-minute time frame, we have this 5-minute fair value gap. Seeing how we have displacement on the lower time frame, and seeing a PD array that supports the idea of us taking out that 30-minute high, it gives me, you know, an entry pattern. It gives me even more confidence that we are going to see higher prices. And look at this 15-minute fair value gap. This 15-minute fair value gap is clearly getting disrespected. We closed above the consequent encroachment, and that closure above the consequent encroachment just means that we prices are probably gonna, you know, dig higher. So after we see this disrespect of the 15-minute fair value gap and a creation of a 5-minute entry pattern, I go on to the 1-minute time frame. So there's that 15-minute / 30-minute high, and whenever we trade back inside that 5-minute FEG, you would take your entry at that 5-minute FEG and target the 15-minute high and 30-minute high. And, you know, your stop loss, I would place my stop loss at this candle's opening price. So on the lower time frames, it looks like, it appears that we took sell side, and so we took this sell side here, and if you can see this as freaking 2022 model. On the lower time frames, you could probably have found a lower time frame FEG, but that just makes things super complicated. I shouldn't have even have brought that up. It just makes it super complicated. Yeah, after we trade back inside this 5-minute fair value gap, I take my entry. And notice how, the one thing I do want to say is, we didn't take this 15-minute and 30-minute high. It's still intact. Notice how this candle, we came close to taking that 15 and 30-minute high, but we never actually took it. If we had taken this 30-minute high and came back inside that 5-minute again, that 5-minute FEG, I wouldn't have taken that trade. Just because my objective has already been taken. We take out this 15-minute and 30-minute high. What's my objective for this trade? Is it going to be another time-based objective? I mean, I can't see another, am I targeting a 27-minute high or whatever? Like I said, I'm targeting the 15 and 30-minute high, and it's still, it's still left unfinished. Job's not done yet. So when prices retraces back inside the 5-minute fair value gap, we take retrace, and then we continue higher. And you can use standard deviations here to have any partials taken off. Like you could have taken a partial off and another partial at the -0.5 standard deviation, even -1 or -1.5. A tip I do want to give you guys is your standard deviations should already like align with pre-existing liquidity. So notice how this high right here, this 1 minute high, it's basically, it aligns with the negative 1.5. Standard deviations are more probable if they align with already existing buy side levels. That's just how that's just how I like using standard deviations. And you can use the bodies of candles too. So here I don't use the body of this down close candle. If I'm taking the high of something, I always want to use a green up close candle. And whenever I take the low of something, I always want to use a down close candle. So another thing I do want to point out on this trade is, like I said, remember that first aspect about that time frame alignment thing. What is this FEG again? It's a 5-minute FEG, right? Notice what did we do on the 1 minute time frame? We closed below the 5-minute FEG. Is that significant for me? I mean, it kind of indicates that we could continue lower, but it's not a complete disrespect yet, because what happens on what is this 5-minute FEG? What's happening on the 5-minute time frame? Do we ever get a closure below it? No, we don't. It's just a wick. It's all it is a wick that we just wick below that we just wick below that 5-minute fair value gap. But on the 1 minute time frame, we closed. But we're not basing a 5-minute fair value gap disrespect on the 1 minute time frame. It should be disrespected on the 5-minute time frame. Yeah, that is this trade I didn't take. It occurred during London session, and I was not awake for that. Well, actually, I think I slept around like 4 yesterday, because there was a July 4th party. Took very tiring after I got home, but yeah, I was able to make it. I was able to get up at around like 8:30. I woke up a little bit late because I was, like I said, I was exhausted. But yeah, never doing that again. That's sleeping at 4 is no good. But yeah, those were the so the first trade that I did recap, I actually did take that trade. I want to be transparent and honest. This was a losing trade, but like I said before, I would take this 10 out of 10 times. Even if I lose 8 times in a row, this trade right here this trade right here, I would take again and again and again. This London trade, if I'm being truthfully honest here, it follows my rule sets. It's just this 5-minute retrace is a little bit deeper than I thought, but whenever I backtest these trades, it gives me more confidence. It gives me more conviction for whenever I see another setup that plays out just like this, because I understand that there will be setups every single day, every single week, and every single month. So whenever I do these backtests, it fuels my knowledge and understanding of price, and it gives me that extra oomph, and it gives me confidence to know, hey, like, I can take this trade. I've seen it before, because I'm backtesting almost every single day. And yeah, so that is gonna be my video trade recap for July 5th 2024. Yeah, I'll catch you guys later in the next video. I think my next video will probably be the weekly outlook, so pay attention to that. Well, actually, my next video is going to be the execution of today's video. If you guys want to watch that, you guys can watch that. There's no commentary. I'm not talking to the mic whenever I'm taking that trade. But yeah, I just want to post it just for transparency's sake, and for my own sake as well. Just so I can see what I relive that trade, and yeah, I'll catch you guys later in the next video. Peace out. Well, bye.